you think the correction in the dollar has resulted in a misread of Fed dovishness based on Jackson Hole? Has this been a macro tourist sell-off of the dollar based on headlines out of the Fed?
The what in the U.S. dollar is the first part of the question?
Do you think the correction in the U.S. dollar has resulted in a misread of Fed dovishness based on Jackson Hole? Has this been a macro tourist sell-off of the dollar based on headlines about the Fed?
No, I think it's a sentiment-based sell-off. I mean, if you look at CFTC futures and options contracts, this is as of Tuesday of last week, you're really the only consensus position that came to be after it was the opposite for the prior 3 to 6 months. I underline it in red, is the dollar, okay? It's not a massive net long position on an absolute basis, but relative to everything else, what happened in early August was that the tourists, to use the appropriate words, macro tourists were forced to buy dollars, short euros, short pounds. You can see I underlined those are obviously overly sold, if you will, in sediment space. So I think just a sediment reality. Two things happened. You got to the top end of the range, and you had the entire world tilt to net long dollars and short euros and pounds. So we bounced. And you bounced quite quickly, which is quite typical of something that happens quickly. Don't forget that going back to April of 2018, this year, the max net long position, not only its relative, like over 2 standard deviations relative to itself on the 1-year Z-score, net long position in the euro was there, but it was the biggest absolute net long position, a notional net long position in the euro, and that was only in April. You know, it's August, for God's sakes. It'll be the end of August soon. But this all changed so quickly, and so many people got crushed by that, okay? I understand, and we want to understand how to not make mistakes here in this part of the game. But the biggest thing we did for you this year was not have you long emerging markets, emerging market currencies, Chinese stocks, going into all that, okay? This is the hallmark of risk management. Today, yeah, it's a much more interesting debate because many more people see what we see, which is, wow, we're not in a globally synchronized recovery. China, emerging markets, and Europe are slowing. And by the way, the U.S. is going to slow on the October GDP number as well. So it's going to get very interesting from here. But again, never forget to measure and map or contextualize why the dollar went down. It went down because it went up, and it went up a lot in a short period of time.